When will mortgage rates hit 4%? That is a question that I am getting more and more frequently. And I got to tell you, I am not in a camp that a 4%, and again, 4.0, just to be very clear, is not something I am hoping or wishing for. In fact, I think if we had a 4.0 mortgage rate, and again, we're talking 30-year fixed, that would be a horrible sign for the U.S. economy. I think in order to get a 4% mortgage rate, we need to be in a deep, dark recession. I am talking 3-4 quarters long. I am talking about -2, -3% GDP. I am talking about an unemployment rate of 8.5%, 9%. So please do not count me in the camp of somebody that is hoping for 4% mortgage rates. I think the people that are hoping for that are probably in a lot of pain. Certainly not thinking of the bigger picture. That said, if we change the story from 4% mortgage to maybe 4.99, now in that case, I do not think we need to have a deep, dark recession. I think we will have a recession. I think the only way we get sub 5% is a recession, is the Fed taking several hundred basis points off the overnight rate. So again, is 4.99 possible in the next couple of years? Sure. Is 4? Let me just say, I hope not. I believe the better question, and the one that is far more relevant today, is, Michael, when will we see, excuse me, sorry about that. When will we see 5.99? You know, that is a very interesting, a very consequential question, because I actually think there are a couple of ways we get to 5.99, and it does not take a recession. It would likely take a couple of things. I think one of the first things that nobody's talking about is we have to bend the curve on the national debt. Now, if we can do that with tariffs, so be it. If we can do that with less spending, so be it. If we can do it with all of the above, awesome. I think one of the things we have to watch out for is the bond vigilantes. And as we saw last September when the Fed cut 50 basis points, they were not happy and they raised the long end, even though the short end fell. I think one of the things that the bond vigilantes will vote positively with is if we can take our runaway debt and just show that we are bending that curve. We don't have to make it go down precipitously. We just have to show that it's not going up at the same unhealthy rate of speed. I think that is something that could get mortgage rates to 4.99. The second thing that I don't think anybody except maybe Logan from Housing Wire and Lance from Resi Club are talking about is mortgage spreads. Mortgage spreads is something you and I have talked about on this channel for 3+ years. Historical average is around 180 basis points. You take the 10-year, you add 180 basis points or 1.8, and you get rough and tough the 30-year mortgage. Now, during the pandemic, during the COVID, during all of that, they expanded to over 330 basis points for a few weeks, certainly over 300 for a year. Quietly, very quietly, in fact, I think Logan and Lance are the only people talking about this, mortgage spreads have been coming in. Now, I haven't checked this morning, but last I checked, we were at about 2.3 or 230 basis points. If that spread continues to gradually come in and we get back to historic norms, that is a 0.5 point. Even if the 10-year note stays flat, we have a 0.5 point in margin spread that could come in and get us very close to 6% even, or in this case, 5.99. So again, these are lots of things that could work together. On top of that, if we show that the Fed is in September or the Jackson Hole meeting, rate cuts are coming, the rate cycles. Wow, let me take a drink real fast. This is something's in my throat. Sorry about that. So again, I don't think there's a lot of things that have to go wrong to get to 599. And as we've learned the last couple of years, 599 does have the power to bring demand off the sidelines. So I've got a lot of data on housing from Meredith Whitney to Mike Simonson to Realtor.com and others we're going to go through today because it's very interesting to watch what I will call talking heads finally getting it, and then people in the weeds seeing that the tide is turning. So we'll go to Meredith Whitney first. She obviously came to fame during the GFC. She is out now saying that home sales are tracking to sub 4 million, worst market in 25 years. She also highlights that 60% of homes are owned by seniors, and thus the lock-in effect is more pronounced because they can't downsize and the like. I do think it is interesting. Meredith Whitney is the first person I heard talk about seniors owning 60% of the homes. That does have a lock-in effect that's extra. But what I think is interesting is Meredith is now talking about 4 million transactions. And you and I have been talking about that for over a year. So in that case, I will tell Meredith, welcome to the club. We have been here for a while. Go get a drink. Now let's talk about somebody who is in the weeds of the data just like me, Mike Simonson. Mike Simonson's out there saying there are two big real estate themes playing out right now. One, active inventory is not growing. Folks, this has been going on for several weeks now, and this is not normal. Normally, if you go back and look at historical trends, active inventory is growing in August, and we are not seeing that. Now, we're not seeing that for lots of reasons that most people miss. One, delistings. We are seeing a dramatic increase of wish pricing simply being delisted. People do not have to sell. The motivation is not there. They will try again later. Also, we are not seeing new listings. In fact, new listings were only 66,000 last week. That is down 5% year on year. Now, for pending home sales, they were at 67,000. Now, it has been a while. You can go back and look at the data. It has been a long time where pending home sales were greater than new listings. Think about that. You throw 66,000 on, you take 67,000 off. And that is before delistings. Folks, we may have had 40,000 delistings. So that is why inventory is not growing. Nobody is talking about that. The other thing that Mike Simonson is deep in the weeds on, it's not a metric that I follow, but it's something that I give him huge props for. He says that price per square foot is about to go negative. Now, this is not something that I have done, not something that I have looked at price per square foot, but it is something that Mike does, and I respect him for it. Looks like we got a super chat from our boy Dion, and Cracked Canvas won a signed copy of Financial Freedom for the Lazy People, selected randomly for leaving a review. Look at that. Dion giving love to one of our joint followers, Cracked Canvas. Congratulations, folks. Dion's book is amazing. In fact, I travel with it because I'm not quite through it yet. But yes, go get your book. Dion is the man. So congratulations to everyone. So again, let's go back to Mike Simonson. What else do we got? Price per square foot is going to fall. And the last thing is 42% of listings have taken a price cut. That has been flat for a little while. Other things we could talk about, and again, if we wanted to be negative, we would throw this in the title. Realtor.com, foreclosure filing spike. Now, of course, you know that's just what doomers talk about. Now, foreclosure filings are up. They're up 13% year on year, 36,130. But still, folks, we are 1 in 4,000 households. Again, this will get worse. This will get worse. This will get worse. But we are not going back to 1 in 10. This is not the GFC. Just stop. Resi Club highlighted that Wells Fargo came out with a new housing forecast for 25 and 26, which I always think is interesting. Wells Fargo is talking price, rates, and sales. We will go through each year. I will let you know where I am, higher or lower than their call. This is always fun for me to see what the best and brightest do. compared to what you and I do each and every day. So 2025 price, Wells Fargo is calling for 2.1% increase. This again is median, or this is S&P, Case-Shiller, excuse me. Case-Shiller is what Wells Fargo uses. They're looking for rates to be about 6.67 and sales 4.13. As far as 2025 goes, I'm going to say sales are below. I'm going to take the under because, again, I've been saying 4 million for quite a while. I think 6.67 on rates is as good a guess as any. And then price 2.1, I'll take the slight under because I've been calling for -1 to 1 all year. Now, 2026 is interesting. They're going to see rates go down slightly. This is like, think about this. They're talking about 6.67 for this year. Next year, only 6.51. I'll take the under. I think rates will go below 6.5 in 2026. They are expecting transactions to go up to 4.2, actually 4.27. I think that's a good number. I think we're going to do 4 million in 25. I think 4.27, decent number in 26. And they think home price appreciation goes up next year, 3.4%. I again will take the under. I haven't changed my opinion. I think we got most of the decade of appreciation done in the first couple of years. And 3.4%. We did get some earnings. We can talk about Lowe's. They missed on revenue, beat on earnings. They raised their revenue guidance, but cut earnings. That is an interesting thing to do. They're basically saying margin hit, margin compression. That is basically, in my opinion, I did not see it in the earnings release, that is tariffs. That is Lowe's eating margin, eating tariffs so the consumers don't. That is what that means to me. In addition to that, Lowe's just dropped $8.8 billion buying a pro business. We got Lazy Boy. Same-store sales fell 4% as consumers are challenged. TJX beat top line and bottom line, sales up 4% year on year, but their guidance was light. And then finally, Target. Target beat top line, bottom line. However, earnings per share is down 20% year on year. Ouch. And revenue down 1% year on year. Plus, the CEO is stepping down. I think the CEO has been in charge for like 10 years or so. So he is out the door. Target not performing well. Mortgage demand every Wednesday. We figure out what's going on. Refi demand down 3% week on week. However, up 23% year on year. I think that's like 14 weeks in a row or 15 weeks in a row of double digits. Purchase demand up very slightly, 0.1, and it too up 23% year on year. On top of that, folks, I do want to let you know that thank you. We've now sold 90 tickets to the ORAD event in Vegas. I am hoping to sell 100 by the end of August. So if you're coming, please buy your tickets. Also, let me know what you thought of that Pace interview. Again, Pace Morby will be the featured speaker on day 2. His community sub 2 will likely show out for that event, given he will be there. So go ahead, buy your tickets before it is too late, because I cannot expand the room. It is capped. And finally, in our school community, we are up to 462 folks, only 38 more to go before we cross the 500 barrier and we add more goodies to the community. So hopefully you're enjoying the school community, all the accountability groups, all the special conversations, all the free stuff. I hope to see you in school. Please get your tickets to Vegas. I would really like to sell 100 tickets. By August, it would just make the 80, 85 grand I have to spend in the next 70 days more palatable, if you know what I mean. All right, folks, take care of yourself. Have a wonderful day. Like, subscribe, comment. Don't forget, if you're a landlord, go to steadily.com, link in the description, and get some insurance quotes. Olivia and I are sending more and more policies to Steadily. They are coming through. They are not only getting us better rates, but they're also providing better coverage. Something we saw in our latest quotes is other insurance companies were dropping things like dog bite, and Steadily gave that to us. I think in one of our cases, $50,000 for dog bites. And you may not think that's important, but let me tell you this, getting that first lawsuit for a dog bite and not having coverage, not a good feeling. So again, in 20 years, I've had one of those. So make sure you have coverage. So compare the coverage line by line, what it is and is not covered. Also compare replacement cost. Every quote we got steadily was giving us better replacement cost, which we've had 4 fires. So trust me, a better replacement cost is important. Again, they will not help everybody. I'm not saying they will help everybody. They've not helped us in every case, but it is worth figuring out, can they help you? Link in the description. Take care, everyone. We will talk to you tomorrow.